Hello guys, how you all doing? Well, I'm good myself, and yeah, Monday we have a new candlestick on our Nasdaq, so I just thought I should make a video and update you guys on. Remember, we had a working an analysis last night. We made a video last night where I gave you the analysis and on what to expect. We made the main analysis last week, which gave us an entry day, and from the video that I made yesterday, we said, because I made the video when the price it was there, and then I gave you reasons why you had to exit your trades or remove half and then put the other one at break even. Now this new candlestick here that you are seeing on this new candlestick, the daily candlestick, it's causing the structure to change a bit. There are a few things that I want to share with you. So if you are new here, guys, just make sure that you subscribe, and also you watch. You can start with the video that I made yesterday, so that this one can be a follow-up. But make sure that you stay with me throughout, so that I can give you all the tips on how to update your trend line, and how to pick the right zones where you can take trades, which ones to avoid. So that's what I'll be sharing in this video today. So let's get started. This is daily, right? And this is a weekly trend line. This, because remember, when we were going down, we did agree that the daily trend line was there. This is a weekly trend line, this one. And yesterday when I made the video, I was very clear saying that you need to exit your trades, guys. Why? Because you hit weekly opposing structure or bearish trend line, this one. So it's not those who are, some, they can look for selling trades if they get reasons to sell because of what they are at that high time frame structure. And yeah, so it means now we are just there waiting for the price to at least have a candlestick outside, a breakout. Then we know that we can look for reasons to buy and target that. But for now we can't target that because of what we have hit. We have hit a wall here. We have hit a wall, this one. So let's wait for the price to remove this. Then that's when we can think of the next target, which is that. I gave you those reasons yesterday. Now let's continue. I want to show you something on H4. And you still remember I said those ones who are trading H4, this is your reason to look for buying opportunities, because you'll be saying what, you'll be leaning on your, somewhere there, you'll be leaning on your thing, on your, remember, this is the H4 resistance. You are looking to sell from that, because this H4 resistance is located at weekly bearish trend line. So if you get reasons to sell there, you are looking to sell. Those ones who are holding their buy orders, I said exit, or you can close most of your trades, and then the remaining trade you sort of move to break even. Your stop loss is still up there, somewhere there, so that if it goes up, you are still in it. But the main thing, the good thing that I would advise you to do, like always, exit, guy. Don't be greedy. Once you hit the opposing structure, just be thankful. Take what you got. That's what you were targeting, the opposing structure. The price hit that, exit. Yes, the price can continue going up like that, but you don't have to catch the whole move. Only catch the whole move if the structure allows you. There's no resistance nearby, then you can catch the whole move. But if there's just too many resistance that the price has to fight in order to get to your area of interest, or the one where you put the trade, for you to catch that full move, then it's not worth it. So imagine taking a buy from this and then exiting at that trend line. That's more than enough, guys. That's more than enough. Then you take your profit, you move to the sideways. You are going to reassess again if the price moves based on how the price moves around the trend line. Those who are trading the H4, this was your guy. This one was your guy. And now let me show you something. It's just that, and another person asked me, because they were using a different broker and the candlesticks look slightly different, but that's not the point. I told them that we will never use the same broker. So that's why today I'm using this veracity something, just to try and analyze on it. Normally you can see that now it has this Z. I don't know what it means, but I just wanted to analyze on a different broker to show that person that it doesn't matter which broker you use. We don't use this to analyze. We don't use the numbers. Some people, they look at the numbers. So for us, we don't look at this. It's like this does not exist. We only use the candlesticks to analyze. So Whether I'm using Veracity or using IC markets or you're using XM, it does not matter. If I've got 10 candlesticks, you've got 10 candlesticks. So work with what you have. Analyze the candlesticks and not the price. So that's why I just wanted to change the broker so that I can show you that it does not matter which broker we are looking at. So we can both agree that when you're going up, we did have a pause there. And the price was moving up nicely. We're still in uptrend. Very, very strong uptrend. Question number one. The main question is that area worth valid for us to take trades from? Maybe yes, and then it failed. That's normal. It can do that. Or maybe no. If you're saying no, why? So the answer is yes or no. I want to ask you, when the price was still going up, it formed the level and it went up like that. Did that level qualify for you to take trades from, to look for buying opportunities to continue with the uptrend? Because you can see we're going up. You see, there is yes and there's no. The answer is no. Now, let me give you reasons why we are not allowed to take trades there. There's no even one reason that's going to give you to say yes. Reason number one, right? I hope you'll agree with me. If not, then it means you haven't watched some of the videos. Reason number one, after forming the zone when you're going up and then the price goes up, before it comes back for us to take trades at this zone, whatever that we are going to risk, this one must be double. So if this is 50 points, this must be 100. You see? So in this case, the move from this to this compared to this to that, it's like 60%, not even 100%, it's like 60%. So you can see that it's not worth it. We need at least 2:1. When I'm buying here, I need to make sure that before the price finds that same area, like hits that area where it turned, before it finds that resistance again, I need to make 2:1. I can exit, I'm done. Because I don't want, what's the point of me buying if all the odds are against me? Where am I going to exit? Because you can see the price is just turning here. If I'm buying here, I'm just going to target that. Risking this is not worth it. You can see that the amount of money that I'm risking and the amount of money that I stand to make, it's not worth it. I'm risking more than what I stand to make. So that's reason number one. Reason number two, when you're forming your zone, right, you need to have like this. You need to do this and go up. Just like when you're breaking the trend line, we can't have this one touching here. Like we can't have, remember we once had that thing it was on the same Nasdaq on daily where we had a candlestick going up and then the next candlestick coming back down. It was like this. I'll show you. Those of you who were with me, let me just go to daily. I'll show you the candlestick. Yes, this one. It was here on one of the videos that I made 2 weeks back. It was that one. We said that the thing went up. For the next candlestick just to come back to the base, that's not worth it. That's very risky. You can see that the bulls, yes, they tried, but for the best to cancel all of that. And then look what happened. It came back. So I want you to try and apply that here to say that when we are having this here, if we have one candlestick going up like that, even if it gives us the 2:1 that we want. Remember, one character requirement is that we need to have this being equal to this, right? Even if that candlestick gives us the 2:1, but if the next candlestick, what did I do? If this is 1, this is 2, where we have this candlestick going up like that, right? So we have our 2:1, what we want. But if the next candlestick is going to come back like this to the zone, we're not going to execute. We are not going to take that. This is not this, like for the bulls to go up like that and the bears to cancel all of that. So you want one candlestick that does not touch. Like we must play around there to show that now the level is active. The level is active. We can like start playing trades around it before we coming back. Then we know that we've got 2:1. We had like candlestick playing away from the thing. It's like when you're looking at the breakout of a trend line. It doesn't matter. We can have one candlestick at the trend line like this. For as long as we don't have a trend line, a candlestick outside, we haven't broken the trend line. That's how we roll here, guys. If you're new to this concept, make sure that you scroll back on this channel and look for the videos that I made on trendline, and then even how the market structure, you'll be able to see this stuff. So I'm trying to show you that this was not a good level. Why? Because this is our thing. We never even had one candlestick outside. So the candlesticks that we have is this, but it still touches the zone. But the main thing is what? We don't have 2:1, and another one, we are at weekly bearish trend line. So why are we fighting all of that? Why are we fighting all of that? You see, so this was not worth it. This was not worth it. And look what the price did. It went back and violated it. So you need to be able to read the structure, guys. Be able to read the structure. It doesn't matter. Yes, the price has been going up, but it doesn't mean it has to continue like that all the time. Like yes, the price can go up, right? But based on the structure, you need to be able to filter some of the trades and say, hey, this one I'm not taking. I'm sitting out on the sideline. I'm not taking this one. If it works, it works, but it was not worth it. It worked, yes, but it was not worth it, because you'll end up making those silly mistakes over and over again. There's nothing wrong with missing a trade. The problem is what? The problem is losing a trade that you could have avoided. That's what we're trying to avoid here with all these lessons. So remember, we said those ones who were trading. I made it very clear yesterday that those ones who are trading H4 is their highest time frame. This is your guy. You can take trades from that guy if you gives you reasons to enter. If it gives you confirmation, because of what? This guy is at the weekly bearish trend line. You see, and it's coming back now. So the only area that we can, so I wanted to show you that you need to be able to pick the right areas where you be risking your money. Even if it loses, yes, you tried, you did your best analysis, it just didn't go your way. Mara, some setups, no guys, no, we can't be risking this just to try and make this. You see some people giving you trades like that, and then when it wins, they're celebrating. But you remember how much the gap you gave. If it comes down, you'll need to win 10 trades for you to recover all of that. But if you are playing it nicely, we say I'm targeting maybe 3:1, right? 1-3. It means if I lose one trade, let's say every trade I take, I risk. Let's say you are risking on a small account, you're risking $50, ne? On a small account, and then you are targeting 150, ne? It means I can lose two trades, meaning I lose 50, I lose 50, and win one trade. If I win one trade, is 150 plus 150. It means even though I lost two and won only one, I still made $50. That's the power of respecting your, sticking to your risk management. Sticking to your risk management. Then you'll see that some trades are not worth it if the risk management or the risk to reward ratio is not, big enough. Then I'm just gonna avoid it. But here we can take this one. I can take my chances here. But the only worried thing about here is that this candlestick, this type of a candlestick, we don't like it. We like stuff like this, the one that has a body but still has a tail. Stuff like this for me to draw a zone using a candlestick like that. Candlesticks, like this. It still has a body. But this one here, very skeptical there. But when it gets there, now I'll be taking my chances. That's the area that I am going to be taking. Here I just wanted to show you that this guy was not, it was not even a level, it was not even something that you should have considered, because of what? The way he formed. We don't have a candlestick above, we don't have 2:1, and we are located at very higher barking weekly bearish trend line. So you are fighting against a lot of factors there. Not worth it. So those who are trading the H4, remember, you got your guy there, and then when it formed this, when this candlestick came back, it gave what? Engulfing. So if H4 is your highest time frame on your sequence, then you know that my highest time frame is giving me an engulfing. So it means if maybe you're trading H4 and H1, or H4 and H1 and M15, so you're gonna go to your middle time frame or your lower time frame just to check how is the structure there. Because remember, if you are trading H4, or what's happening with your broker now? If you are trading H4, I don't know what's happening here. If you're trading your H4 as your highest time frame, you'll be taking trades on your H1, or you'll be taking trades on your M15, depending on whether you decide to go with 2 time frames or with just one. I mean with 3. Yeah, man. So if when you are coming to H1, Remember, H4, it means it will be for direction. Every time the price hits your highest time frame, a level on your highest time frame, you look for trades in the opposite direction to the next level. If you don't get them, the price will just penetrate that. But again, you still need to respect your elders. You can't just say because I'm trading H4 and the bigger guys are saying I must. So I don't know what's happening with H1, but let's check M15. Maybe it will show us something. Yes. So M15, on M15, the trend line that we had was there. The trend line that we had was there. So let me try and draw it nicely. I wouldn't have I don't know if it will be a breakout over or what. So the trend line is here. Yes, so we do agree that the price, we do have a candlestick outside that does not touch the trend line, which means the trend line is broken, and it was broken by this guy here. This guy is the one that gave us the move to the downside and broke that, and you can see the price went up and retested it. So I don't know if you would have been strong enough to sort of execute from there, but now wouldn't. Why? Because we haven't broken this guy. We hadn't broken the support. We broke the trend line but not the support. Yeah, but so maybe someone would have went with the thought, when you break your trend line, you move into consolidation, and when you're in consolidation, you are more than welcome to buy, sell, buy, sell, buy, sell until one of them is broken. So maybe that's what you would have went with and decided to take a trade from sort of to say now the price moved from the support, it went up to the resistance that broke the trend line, and then I'm buying this, but you had to close here because you didn't know what was going to happen, and then now it broke out, and then you are saying, oh, now we get a breakout. This is the new area of support that gave us the breakout of what, of this, the new area of resistance that gave us the breakout of the support. Then maybe you were hoping that you will come here and then you execute again, but it didn't go all the way up there. It turned here. You were just waiting there. It happens, but it's not a loss. You just missed your thing. So that's how you trade. So that's why it is important that you stick to your time frames. It's each one to its own, guys. We don't overlap. You see, when you're trading M15, you're getting all these opportunities, but someone who's trading H4 is not seeing anything. The only thing that they got, they just entered once there and then they are done. They are going to exit here. So when you're busy getting your stuff, that's what I'm saying. The lower you move, the more chances you're gonna get, which means you've got chance of losing a lot of trades than someone who's trading H4, or you've got the chances of winning more trades than them. But that's it. So for now, if you managed to get that sell that we spoke about yesterday, you should be happy. And you can see now you're having sort of a rejection bar there, or this bar, this candlestick is showing us that there's a lot of bearish force because of what we had. This guy tried to go up, but it ended up being pushed down and closed here. You can see that whatever that pushed him down can still continue, which means it will give us that last leg to come here. You see, so you can see it's something like this in the middle of a trend, and you can see they tried to come back, but they pushed them and closed them up there, and then they still continued like that. So maybe the same thing would happen here, but I'm not saying it would happen, maybe, but now I'm waiting here. Those who bought from the top, manage your stop losses nicely. We are waiting here. Now this is where I'll be looking for reasons to go long. Because of what, this momentum to the upside, the trend line is here somewhere there, and this guy is still above the trend line. So it's more like we'll be testing the trend line and also testing that area of support. So that's where I'll be trying to buy from there. And when I'm buying, you can see this is definitely the requirements. They are there. We formed the thing. We did have candlesticks above that don't touch the trend line, and we also have more than 2:1 going up there. So this is something that is worth looking for trades from it. So that's it. I'm gonna end it here. I just wanted to update you guys and specifically talk about this guy here, so that when you're coming across such situations, you know what to do. So it's very important that you know how to filter some of the areas and leave them out and not entertain them. And again, the one thing that I always emphasize on is never fight against the higher time frame structure. This weekly trend line here You get to it, you are out. You are out. Take what you have. It's more than enough. If you got your trade from there, it's more than enough. If it breaks out, missing out is better than losing something. Missing out, you don't lose anything. But imagine losing something that you could have avoided. One. So you won't have progress. But if you just take what you were targeting and you're out, you'll see progress. All right, I'm going to end it here and then I'll see you in the next one. Sharp.